What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, a lot of you guys are new to my channel. This channel's growing really fast, so make sure you subscribe if you're watching my videos. There's always a special request for AGNC. So, a lot of you guys that are new to this YouTube channel, I'm going to do a quick stock analysis. I'm going to go over them. I'm going to tell you why this is not a good monthly dividend REIT for long-term wise and even for income wise. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out AGNC right now. So first, let's do a quick stock analysis. Looking at AGNC, it looked like it was at its peak in 2012 and declined over time. So at its peak in September 2012, September 21st, 2012, it was 35.17. That's right when I started accelerated nursing. Now it is at 997. Okay, so when the pandemic hit, it was at 951. Right now it's at 997. So people hit the panic button during the pandemic. There was a huge significant drop in stocks in the stock market. And AGNC has not really recovered since the pandemic, because at one point it was 1919, dropped down to 951, and now it's 997. So you're starting to see some trends that are a problem. Yes, I like high yield dividend stocks. I like high yield REITs. Its dividend yield is 14.44%. So when things are in the danger zone, and less than $10, you have to really evaluate them, see what's going on. Now, again, this is a mortgage-backed REIT. My favorite mortgage-backed REIT is Arbor Realty Trust. So, yes, it's been down a little bit. It did recover post-pandemic. I have a lot of shares. Quarterly dividends from them are like $300 or so. I'm going to be earning passive income with them in February, which I'm going to use the passive income to buy realty income. I have a goal to get to 200 shares. Watch my previous video, by the way. So you're seeing some problems. Just hasn't recovered. We have an issue there with AGNC. Arbor Realty Trust seemed to, they had some negative attention. People appeared to falsify information on them. Those guys have blocked many of us on X when we question them. AGNC has an average volume of 19.40 million. The market cap is 8.95 billion US dollars. Tier range is 892 to 1085. Day range is 991 to 1006. Previous close is 996. So we need to look into a few more things. So let's look at revenue trends. Okay, so 2019 for the pandemic, 2008.42. 2020, you can blame the pandemic, 1,519. 2021, 1,361. 2022, 1,590. 2023, 2,041. So it still hasn't recovered since the pandemic. A lot of these weaker mortgage-backed REITs have not responded since the pandemic happened. They're taking a hit. The revenue trends have not been very positive. So as a dividend investor, dividend growth investor, high yield dividend investor, I don't like that from 2019 to 2023. Because I need to see consistency, especially with REITs, mortgage-backed REITs as well. So there's not a lot of consistency yet. It hasn't done really strong. That irks me, all right? That's oof, okay? That's right there. And even more, you're going to be disgusted once I show you the dividend history. So I'm going to start in 2016. 18 cents. Just stagnant. 2017, 18 cents. 2018, 18 cents. 2019, 16 cents. Right there is a dividend cut. They're losing passive income right there. Now, in the long term, if you reinvest the dividends, you'll probably be at equilibrium or maybe get break even. That's a long time. I want dividend hikes. Okay, I want Arbor Realty Trust with the dividend hikes. I want Realty Income with the dividend hikes. I want Agree Realty Corporation with the dividend hikes. 16 cents, 18 cents, 16 cents. And in 2020, okay, understandable. Pandemic happened, so it dropped down to 12 cents. 2021, 12 cents, 12 cents, 12 cents, 12 cents. 2023, 12 cents. 2024, 12 cents, 12 cents. So you're going to see a normal REITs, you'll see a higher payout ratio. Remember, 90% of what they make go back to investors. Dividend growth in 5 years, negative 1.63%. So if you bought one share, you made 144 with a 14.44% dividend yield. So the trends are not very good. So when I look at high yield dividend stocks, especially mortgage-backed REITs or REITs, business development companies, look at FFO, which is an AFFO, extremely important. I look at the dividend growth history. I look at the revenue trends, and I do a little bit of a stock analysis, studying the stock, because what happens if it goes down? What are we doing? Why is it going down? Then it needs further investigation. When it's above 10%, it needs further investigation. Above 8%, even the Altria needs further investigation. Is it stable? People still going to smoke? You have to study the trends and understand the stock even more for the company. When it's a high yielder, is it stable? Is it in demand? You have to add a lot of factors into that. It's just not attractive for me. 12 cents is sitting there at 12 cents every month. I don't like that. It's not my thing. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you on Wednesday. Let me just look. Yeah, Wednesday. I'm looking at my calendar. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. It is best to seek financial advice from a financial advisor and tax advice from a tax advisor. Go to them for financial advice. Go to the tax advisor for tax advice. You can lose money when you invest, so you have to do your due diligence. My investing strategy is very unique. Many of you in your situations, it may not be a good idea to do that. But I show people what I do. I'm a very aggressive dividend investor. I'm a high yield, and I'm also a dividend growth investor. So I usually give people a warning if it's really a high risk in what I see for my for entertainment purposes only, but high risk, dividend growth 5 years, negative 1.63%. Take care and have a great Sunday.